You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I'm looking for 2, 3, 4, 5 times performance out of the stock warrant than I am out of the common shares.
Welcome back to Mining Stock Education. I am your host, Bill Powers. Thanks for tuning in. And in today's show, we will be discussing common stock warrants, specifically warrants on these junior mining stocks that we invest and speculate in. Warrants are a more leveraged way in which we can speculate in the resource sector. I have someone with a website and whose expertise is in this area with me on the line today in this episode. He is Mr. Dudley Baker. The website is commonstockwarrants.com. But before we speak to Mr. Baker, I would like to thank Lumina Gold Corp for sponsoring this show. This is a Ross Beatty company. Ross Beatty owns about 20% of Lumina Gold Corp. They have a 17 million ounce, which is massive, gold deposit in Ecuador, and I was just a couple weeks ago in Vancouver at the Vancouver Resource Investment Conference and was in the room when I heard Ross Beatty say that he is going to sell Lumina Gold Corp. He's going to find a major who is going to buy this company this year at a higher share price, he said, and of course at a premium to whatever it's trading at when it is sold. So that's a pretty bold prediction, but it comes from somebody with a very good reputation as one of the premier mining entrepreneurs. To learn more, go to luminagold.com. Ticker symbol is LUM in Toronto, and in New York, you can find it under the ticker LMGDF. Well, Dudley, thank you for joining me today. And as I was going over your bio, looks like you started off with one of my least favorite organizations, no offense, the IRS. Just wrote a huge check to them. But how'd you go from the IRS to speculating in resource stock warrants?
Hi, Bill. Well, great to be back with you. This is the first time on your program, so great to be here. Yeah, I tell you, it's I've had a strange journey in life. It's been an interesting one, and some that your readers probably won't give a damn about. But it's like, when I got out of college, somebody recommended, said, Dudley, I majored in accounting, and they said, maybe you need to go to work, or suggest you go to work for the IRS for maybe 5 years and then go get a real job. Well, I never left after 5 years was the problem. So I stayed. The only thing, the positive spin I put on it is that most of my career, let's say the last 20 years out of the 30, I probably spent on the major oil and gas companies. The largest corp in the world is where I was for 10, 15 years. I was like the coordinator of the audit, planned it, largest company in the world. We had 30 agents on the case, and I was kind of like the lead agent. So it was a massive audit that went on for many, many years. That got me to New York. This was all when I was based out of Houston, Texas. And so had many, many trips. Almost every month I was in New York at the corporate offices. And it was a cool deal. And I say, I use this, it's a terrible word to use, but instead of the individual taxpayers, I'm kind of harassing the largest corporation in the world. The reality is that they were the ones harassing us because we were always outmanned with their legal staff. We were always behind the guns. But we were always talking about billions of dollars with a B instead of, the average individual. So just a different journey in life. And I actually took an early retirement in 1996. It's hard to believe. So this has been a journey. But me personally, I've always been interested in the resource sector. Going back into the 90s, and through the years, of course, I've been to all the conferences. I know the players. I know Rick Rule. Louis James. All of these guys. We crossed paths, and just a lot of great experiences. Frank Holmes. I visited with Frank many times there at his office in San Antonio, Texas, which is where I was born and raised in San Antonio. And then most of my work then ended up being in Houston with the big companies. But so it's just really been fun for me. And to wrap up where I'm at, so now, I've always had the love for resource companies, but personally, I found the opportunity 20 plus years ago to actually move to Mexico. So most of my time is spent in Mexico now, Lake Chapala area outside of Guadalajara, and just many friends here. It's just a great place for me to call home, and it's worked out. But we can get to the airport in Guadalajara in 30 minutes and get anywhere in the world that we need to be.
Dudley, we should define a warrant too for those that aren't as familiar. Most listeners will already know what it is, but it is the right, but not the obligation to purchase a share of a company at a certain price within a certain time frame. And the warrant, unlike an option, is issued by the company in conjunction with a private placement as like a sweetener. So private placements are sold as units, and some private placements come with a full warrant, some come with a half warrant, some come with a quarter warrant. So that's what a warrant is. And Dudley, how did you focus on this warrant? Because I got into junior mining speculation because the inherent leverage that's already present in these stocks, but then the warrant gives you even more leverage. So you come from the IRS, which is, that accounting background, which if I were to stereotype you, I would think, okay, you're going to be more conservative, but warrants are so highly leveraged. So what was the draw for you?
Well, it is about the leverage and making, a bigger bang for your investment dollar. Literally, my knowledge goes back decades. Back when I was still working for the feds back in Houston, I was aware of Sidney Freed, who had RHM warrant survey way back in the 1970s. God, for your younger readership here, I would go over to the library in Houston and look at this service. And everything then was just hard copy. It was almost before internet stuff. And so my knowledge goes all the way back into the 1970s. Now, I've got a copy of all of Sidney Freed's works that he's done. He passed on somewhere in the early 1980s, but I've found copies of all of his works. For anybody that visited just the homepage of my website, you'll see that I've got a copy of Sidney's original work. It's called The Speculative Merits of Common Stock Warrants. And so he actually started on this in 1949. The deal is, guys, nothing really has changed. It's still a lot of mathematics, but this is all simple stuff, and in my database, I've got it all figured out for you. But it gives you an incredible knowledge and history base. And so I've got a copy of his original work right on my site that you can download, as well as a book that I did a year or so back, just the Stock Warrant Handbook, which I did. So, but yeah, stock warrant, the definition and everything is so similar to stock options. The big difference is that the warrants are actually issued by the company. As Bill said, is basically is an equity kicker to get the deal done. I always say that probably, especially in the resource arena, probably every company in the resource arena probably has a stock warrant, but not all that many trade. It's up to the company and their legal advisors, etc., that make the decision: do we or do we not want the stock warrant to trade? So it's an in-house decision. I wished it was mine. I'd have them all trading, but I don't have any input into this. So we have I want to say a limited number, but yet it's enough that there's some really good names of companies that have the warrants trading. So if it's trading it's in our database. That's the main thing.
Dudley, what goes into the decision-making process of the management teams? Why, when a management team decides to have their warrant trade, why would they do that, and why would another company not have the warrant trade?
I can put on a different hat and argue both sides of it. Yeah, you could say, why would they want to warrant the trade? Because they would like the investors to be buying the common shares instead of buying the warrants. If you and I go out and buy warrants on let's just say Equinox Gold tomorrow, none of this money is going to the company's kitty. And so it's not really helping the common shares or anything. So it's just a personal issue. Some of the management, they just love the warrants. They want their warrants to trade. It just is a personal situation. Probably like some of your readers here, some will say, gosh, it sounds interesting, but I'm just not interested in warrants. And some of the management of the companies might just be the same way. And some are really excited and some are not. So we only, we're only working in my database. We've got to have access to all the information. And so, I spend many hours every week just trying to make sure that we got the database up to speed. And so we got a lot of warrants in the Canadian side that are the resource companies. Of course, nowadays, on the Canadian side, we've got a lot of the cannabis companies that have got stock warrants that are trading.
One of the things you do in your database is you determine whether it's overvalued, fair valued, or undervalued. Can you talk about how you value a warrant?
Well, the way I do it is it kind of gets back to how Sidney Freed kind of said. It's like, what if? What if the common stock doubles, goes up 100%? What is the warrant going to do? Now, and I'm looking at it, if so I've got a massive spreadsheet that that in a database format that all gets updated on a daily basis. And I can see if the common stock goes up 50%, 100%, 200%, 400%, what is the warrant going to do percentage-wise? And I make this decision. So in my mind, sometimes if you get really far out of the money, if the common stock, just throw out if an exercise price was say $4 and we were down to common stock had dropped down to $1. So even if the stock now doubles and goes to $2, the warrant still may not be a good deal. It may or may not be, depending on how much remaining life it is. So I will say it is somewhat subjective, that valuation that I put on it, whether I say it's overvalued or undervalued. I am always looking, when I personally buy a warrant, and this is always my guidance, is that I'm looking to make at least, if I want the common, if I think I'm going to make 100% on the common, I want the warrant to go up at least 200%. And in most times, that's the minimum. I'm looking for 2, 3, 4, 5 times performance out of the stock warrant than I am out of the common shares. And so if I say it's undervalued, then that may be a good gauge that there's a big multiple potential to be made there.
What's your biggest winner? Would you be willing to share?
Oh, gosh. One that still sticks in my mind was only a few years ago in terrible market environment, and that was on the Northern Dynasty. Northern Dynasty, this must have been 2015, came out about mid-year with had a private placement, but the warrant immediately started trading. It traded as low. It was a 5-year warrant, which is incredible. I was able to buy it. It's right at almost within a half a cent of the low at 16.5 cents. This was just trying to. Trump got involved in this, and he was easing up on the environmental regulations, et cetera, and so Northern Dynasty shares took off, and literally this warrant went from 16 and a half cents, and I sold it for well over $3, all within 7 months. I came in July. I was out in the following January. And so that was a couple of 1,000% gain in a really short period of time. Now, you say that's just lucky or whatever. We were in the right place, the right company at the right moment. That warrant still trades today, and it's almost all the way back down. So it behooves all of us that we always have to keep our antenna up. We're all here to make money. And so if we're fortunate, and whether it's a common stock that we own that does well, or whether it's the warrant that does well, we have to, take that money off the table, and we have to personally make that decision, because it's all about making money, and we haven't made money until we've got it in our own bank account, and we've closed out those positions.
Dudley, when you're analyzing what stock warrants you'll buy, like in the case you just mentioned with Northern Dynasty, there was something external to the company that helped the share price with Donald Trump being elected and the lessening of regulations. Therefore, they might get their permit for the Pebble project. So that was I remember at the time also there was a lot of promotion behind the stock. So talk about your fundamental analysis when you because you're obviously going to look at catalysts, because with warrants, you have 1 year, 2 year, or maybe in rarer circumstances, 5 years. So you're more time constrained when you buy a warrant. Talk about how you analyze the catalyst for the stock and what you want to see.
Yeah, I mean, I still, on every company, I still want to see some serious participation by management. I mean, you can have a little bitty XYZ gold, and maybe it just doesn't hit your hot button. Maybe it does have a 2-year life, and you think, wow. And it's always a chance that in a rip-roaring bull market, which I think you and I agree could be right in front of us, it could be a lot of these little companies that are in our database are going to do really, really well. I cannot be familiar with each and every one of them, but usually, if it's in the gold or silver arena, I like to say, wow, well, wonder what's the deal with this one? I just added a new one last night to the database. Got a 3-year life. Just started trading last Friday. Now, whether this is going to be a home run or not, I mean, who knows? But I like it's in the gold space. It's got a 3-year life. It could be bought for less than 10 cents on the warrant, and you think, man, maybe this is going to be a real home run. So it's kind of market timing is so much of it. Let's face it. You could have the best company in the world, and they've got a stock warrant trading, but if we've like this negative environment for the resource sector that we've been in for quite a few years, with very, very few exceptions to on good stories, it's been really challenging, let's say, to make money, whether that's the common shares or whether that's stock warrants. So we just have to be realistic, and it's all about the market timing. And I think right now we finally are on the sweet side, I think, of the market timing for resource investors. So it makes more sense now than it has in many years to be looking at these stock warrants.
When it comes to timing, one of the things I always look at is silver, because silver is so violent both to the upside and the downside. And when I think we're coming near a bottoming, my go-to leverage play has been the long-term call options on First Majestic Silver, maybe a 2-year out call option. That's typically what I purchase when I want to speculate on the silver price. Do you buy call options as well as warrants, or do you focus almost exclusively on warrants?
I have not bought call options in many years. No, I guess I'm really focused on what I'm doing. So I'm either buying some of my own warrants, that are trading, or the common shares. Now, to bring that up, it's like I'd say anybody listening, I'm not saying put 100% of your money in stock warrants. This would be foolish for anybody. It'd be like saying put 100% of your money in call options. That would be foolish. So, for the average person, I would say, 10 to 20% probably max. Say if just to round off, you had $100,000, but you'd probably want no more than maybe $20,000. in the stock warrants that may be trading on some companies that you really like. So a lot of my portfolio is in the little mining companies also. And in some cases, I've got a position in the common shares as well as a position in the stock warrant. So that if something would happen that, say, the warrant would expire worthless, the clock ticks off on us, I've still got a position in the common shares that I'm going to, if it doubles or triples, then I've covered my entire cost, even though I may have lost money on those warrants. So I've got my own little built-in hedge on several of these positions. But I've just decided to kind of focus on what I'm doing. I spend a lot of time just in maintaining the database. And but just so everybody knows, Bill, so I've kind of got it separated where we've got the Canadian database with all of Canadian warrants trading, and now also all in a separate database, all of the U.S. stock warrants that are trading. So a lot of the biotechs and pharmaceutical companies in the United States. So we've got net hundreds of warrants possibilities that are there, for subscribers to see every stock warrant that's trading in the United States and in Canada. But yeah, my hot button is definitely the resource sector. My subscribers get to see exactly what I own, whether that's the common shares or whether it's the warrants. I identify it all out, and as I'm buying or selling myself, I send everybody an email so they know what the heck I'm doing and why I'm doing it. And so it's just been a really cool journey. It's just a different way to, I want to say, play the markets. But what we do know is that it's much, the warrants always just trade for a fraction of the price of the common shares. So, it may just be like 1/4 of the price or something, and instead of buying common shares, just like buying the call option. So it's much less than, you've got much less investment on the line. You're looking for the longest time horizon that you can possibly get. And preferably that's 2 years or more of remaining life. One of the companies that I've been on board with for a good while is the Grand Columbia Gold, and their warrant, this April, it will still have 4 years of remaining life.
And that's in the money right now, isn't it?
It is deep into the money, but it's still going to basically go, dollar for dollar, penny for penny with the common shares. And so I like that story. I got in the early days when it started trading. I think it was in the low 90-cent range when it first came out. It was in the money when it actually came out. And so it's just been a great story. It's up in the $3 range right now. I still think that, we've got a couple of 100,000 ounces of production. They got cash in the bank. I mean, this, with substantially higher metal prices, this is going to be a cash cow.
But Dudley, for those that don't own this already, this one, because it's in the money, it's not going to give them the leverage, whereas most of the warrants you profile are out of the money. So there's the greater potential for higher percentage returns in the out of the money warrants, correct?
Well, definitely. There, you might say, and with that comes a little more risk. So yeah, the safety factor with Grand Columbia is that it is in the money. The warrant will still go up. Yeah, and if we're fortunate, still going to be 1.5 to 2 times the performance of the common shares. But the real money is to be made that those are out of the money right now, and where we can actually get that 200, 300, 400, 500%. Or let's say 5 times more than what the common stock's going to do. So, yeah, and nobody knows the magnitude. I think we're convinced that there will be a big bull market right here in front of us. What the strength of that and how high, say, gold's going to go, silver's going to go, which company is going to perform the best. I mean, I have a whole basket myself in my portfolio, and I'd love all of them to basically perform well. I'd love everything I own to be a 10-bagger, and that's I always use that expression. So it's like if we get fortunate and get 500 to 1,000%, even if it's not on every position, I think that possibility is here. But you're definitely right. To find those that are out of the money on a company that I always say you like, that our listeners like, you need to like that story yourself. I always say if somebody's following me, that's great, but please do your own due diligence. If you see Dudley owns Grand Columbia Gold, okay, well, that's great, but you take a look yourself and make sure you like that story. And so we all have to sleep well at night, and you can be comfortable and all of this stuff, and look at the time horizon and how much time is left on the specific warrants. But no, I just think for me, this makes so much sense. I just happened to be back in 2004, I think it was. I was at one of the mining conferences in Las Vegas, and Frank Holmes was on the podium, and he mentioned stock warrants. And I thought, my God, it's been years since I've heard about stock warrants. And I immediately started researching, and there was no service. And a few other Canadian buddies said, Dudley, you need to just do this yourself, put together the database and everything. And I did. And we've greatly expanded this through the years. And now I always attribute Frank Holmes mentioning that on the podium. And now I've had the opportunity to visit with Frank and his team in San Antonio on numerous occasions. And
he's behind Grand Columbia Gold, isn't he?
I think he still has a really nice position. I don't know to what extent, but I know through the years. And again, that's another story that you may say it's all about market timing, because Grand Columbia Gold has now probably been around for, I don't know, let's round it off 10 years or so. They've had warrants in the past that have expired worthless. They have done one or two reverse stock splits through the years. It's cleaned up now. So now the timing is on our side as investors. Previous, a couple of years back, would have been a nightmare because the timing just was not right for this company. Now, and so that's kind of important with a lot of these little companies. They raise money and then do a rollback, raise money, do a rollback, raise money, do a rollback. And eventually some of them get it right. They actually get where they can take this company into production. And now we got cash flow, and Grand Columbia is just a great example of that. And I think it's just going to be it's already been a great home run for a few 100%, but I still think there's a lot more bang for the buck coming. But yeah, a lot of these little ones, I'd like to think that a lot of the warrants that I personally own are going to be 10 baggers.
Dudley, as we have been talking, this is speculation versus investing. When you think about, as we kind of conclude here, when you think about the key traits, what would be like the 3 key traits of a successful speculator that you could share with my audience?
3 key traits.
What traits would you need to see in a person such as yourself that's going to be successful and make money at buying and trading warrants versus someone that wouldn't?
Okay. Yeah. No, it's like I think we just have to approach these markets with common sense. And that's hard to even say common sense when it comes to the resource sector sometimes, right? It's like smaller speculative companies. So it is so important to look at the management. Who is the management team? Does the management team have a nice position in the company? And so I look at that, number one. Anytime I hear, for me personally, when I hear the name of a new company or Joe Blow is recommending XYZ, I do 2 things. I know, number one, I go and look at the longest term chart I can get on that company. Where has it been historically? And the second thing I do is I run all the insider activity. I personally subscribe to inkresearch.com, which I don't know, probably $100 a month. I get access to hundreds and hundreds of companies, and I track them. And if any insider breeze, I get an email. If they buy or sell, I get an email as to what's happening. Me personally, I feel comfortable with that. It gives knowledge for all of the companies that have stock warrants trading, especially in the resource sector. If any officer is buying or selling, I get an email, and I can really keep up with what's happening there. But I think it's never put all your eggs in one basket. You know, that basket can look so damn good one day, and the next day things just don't work out. So whether you have $5,000 or $10,000, you still have to take that, in my mind, and say divide it by 4 at a minimum. The more money you have, if you've got 50,000 or 100,000, I think you go up to 6, 8, 10 positions, and with the full awareness that any one of those positions may disappear tomorrow. Something just happened. So we've got to spread out our risk, but we still going to have enough money in these positions that if we get the 10 baggers, 500% or a 10 bagger, it's going to more than cover 1 or 2 losses. So I think we all have to just diversify and do it ourselves in our own basket, and so that it makes sense for us personally.
That's excellent advice. The website, again, is commonstockwarrants.com. Go check it out. As Dudley mentioned, you can sign up for the email list, and then you have access to download for free his book, as well as 2 other books that deal with the topic of discussion from today's show. Dudley, it was a pleasure having you on Mining Stock Education today. Thank you very much for joining me.
Good to be here, Bill. Thank you.